At this precise moment on Monday morning, the live ticker for Nuburu Inc., symbol BURU, is flashing at 21 cents. To be exact, it is trading at $0.2068. The stock is currently showing a gain of roughly 1.32% for the day. It is 10:30 a.m. Eastern Standard Time. If you are scanning a watch list of industrial tech stocks, you might see this fraction of a penny move and scroll right past it. The expectation is that a stock trading at 20 cents is simply dead money, a company on the express train to the OTC pink sheets or bankruptcy court. The market wants you to believe that this is just another failed SPAC that couldn't commercialize its science project. But the reality of this specific price action, right here at the 20-cent level, is far more complex and potentially explosive than the surface-level apathy suggests. What we are witnessing is not the flatline of a dying patient, but the calculated suppression of a coil that is being wound tighter by the day. The volume we are seeing this morning, over 10 million shares already traded, is not retail boredom. It is institutional maneuvering. At 21 cents, Nuburu is no longer just a laser company. It is transformed into a geopolitical chess piece in the European defense sector. The expectation is that they are running out of cash and will be delisted. The reality is that they are currently executing one of the most aggressive pivots we have seen in the microcap space, effectively betting the entire company on a golden power maneuver in Italy that could redefine their valuation overnight. Most people engaging in online investment or checking their Schwab Intelligent portfolios filter out stocks below $1. They are told by their robo-advisors to avoid the risk. But risk and uncertainty are two different things. Risk is when you don't know the outcome. Uncertainty is when you know the outcome is binary. Nuburu is a binary trade. It is either a zero or it is a multi-bagger based on the success of its new dual CEO structure and its integration with NATO-aligned defense contractors. This isn't an investment for the faint of heart. It is a venture capital bet trading on a public exchange. Let's look at the immediate intraday movement. The stock opened at roughly 21 cents, dipped to 20.5, and was immediately bought back up. This wick on the bottom of the candle tells us that there is a bid sitting there. Someone, likely a specialized distressed asset fund or a strategic partner, is soaking up the liquidity. They are not chasing the price up, they are letting the sellers come to them. This is classic accumulation distribution behavior. The sellers are the tired retail investors who have held this from $10 down to 20 cents. They are exhausted. They just want out. The buyers are the ones who read the 8K filings about the Techni agreement and understand what blue laser technology actually means for the next generation of drone warfare. The expectation regarding the technology is that lasers are lasers. You buy them from IPG Photonics or Trumpf and they cut metal. But Nuburu's blue laser technology is fundamentally different. Physics dictates that blue light is absorbed by copper and gold far better than the infrared light used by traditional industrial lasers. Why does this matter? Because the entire green energy revolution and the defense systems that protect it is built on copper. Electric vehicle batteries, drone motors, radar systems, they all require welding copper. Infrared lasers struggle with copper. They spatter and create defects. Blue lasers weld it perfectly. The market has priced Nuburu as if this advantage is worthless because they haven't sold enough units yet. But the reality gap here is that the application has shifted from making consumer electronics to making military-grade hardware, where the tolerance for failure is zero and the budget is effectively infinite. When you look at NVIDIA's stock, you see the AI processing layer. But AI needs power. It needs batteries. It needs thermal management. Nuburu is the pick-and-shovel play for the physical manufacturing of the electrification era. The disconnect between the stock price of 20 cents and the intellectual property portfolio is staggering. The market is pricing in a bankruptcy before the tech can be monetized. But with the recent Tecne financial program, Nuburu has signaled that they are not going bankrupt. They are going to war, literally and figuratively. They are funding a strategic partnership with Tecne SPA, an Italian defense contractor, to integrate their lasers into military vehicles and drones. This brings us to the golden power narrative. This is the critical piece of the puzzle that you won't find on a generic investing site's summary. The Italian government has a golden power rule that allows them to block foreign investment in strategic sectors like defense. Nuburu is currently navigating this review process. The expectation is that this is a red tape hurdle that will kill the deal. The reality is that this review process actually validates the technology. If the Italian government is scrutinizing it, it means it is strategically important. It means it matters. You don't use golden power on a company making toaster ovens. You use it on companies making things that go boom or stop things from going boom. This regulatory friction is what is keeping the price at 20 cents. If and when that approval comes through, the repricing could be violent. For the self-investing crowd utilizing a Fidelity mobile app or Robinhood stock trading account, this is where you have to look at the fail-to-deliver data. With a short interest hovering around 16% of the float, there is a massive bet against this company. The shorts are banking on the delisting. They are paying the borrow fees because they think the stock goes to zero. But every day that Nuburu survives, every day they announce a new tranche of funding for Tecne, the shorts sweat a little more. At 20 cents, the risk-reward for a short seller is terrible. You can only make 20 cents, but you can lose dollars if the stock spikes. We are seeing a potential short trap forming where positive news regarding the Italian joint venture could force a scramble for shares that simply aren't there. We need to address the compliance elephant in the room. Nuburu has received notices from the NYSE American regarding their stockholders' equity levels. This is public knowledge. It is why the stock has a .BC or similar designation on some platforms. The expectation is that this is the death knell. The reality is that they have a plan submitted and accepted by the exchange to regain compliance by late 2026. This gives them a runway. It gives them time. The market is pricing them as if they have weeks to live, but the exchange has given them nearly 2 years to fix the balance sheet. This discrepancy in time to death is where the opportunity lies. If you believe they can fix it in 18 months, buying at the price of immediate death offers significant leverage. Let's talk about the dual CEO structure. It is unconventional. Usually, when you have 2 CEOs, you have no CEO. That is the corporate governance expectation. But in this case, the split is clear. One focuses on the legacy laser business, and the other, Alessandro Zamboni, focuses on the financial engineering and the European defense strategy. This specialization allows them to fight a two-front war. They are trying to save the commercial business while building the defense business. It is a high-wire act, absolutely. But at a market cap of under $20 million, you are paying for the option value of that act succeeding. If you are using Interactive Brokers trading tools, pull up the volume profile for the last month. You will see massive spikes in volume on days where the price didn't move much. This is churn. It is shares moving from weak hands to strong hands. It is the sound of a cap table turning over. The tourists who bought the IPO are gone. The people left are the ones who understand the nuances of the contratto di rete with Tecne. Now, I want to hear from you. This is a battleground stock if there ever was one. Comment below with how many shares of Nuburu, BURU, you currently hold. Are you holding a heavy bag from the SPAC days, or are you a new entrant buying these lows? I want to know if you think the Italian golden power deal will pass, or if the government will block it. Your sentiment helps us gauge the retail conviction levels. Let's pivot to the broader industry context. We are seeing a massive reshoring of manufacturing. The Make in America and strategic autonomy in Europe are the dominant themes. Nuburu sits right at the intersection of these two. They have US-based manufacturing for the lasers and now they are building a bridge in Europe. The partnership with Maddox Defense to build drones is particularly timely. The war in Ukraine has shown that small, cheap, adaptable drones are the future of combat. Nuburu's technology allows these drones to be manufactured faster and with lighter, stronger materials, like aluminum and copper alloys, than traditional methods. The expectation is that defense primes like Lockheed or Raytheon will dominate this. The reality is that they are too slow. The agile, smaller players who can iterate quickly, like the Nuburu Maddox JV, are the ones winning the contracts for the next generation of loitering munitions. When you consider the Interactive Broker's stock trading fees for borrowing hard-to-locate stocks, BURU is often on the hard-to-borrow list. This technical factor adds fuel to the fire. If a catalyst hits,